Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so today we're going to do a market update,
Okay.
but we're going to do it a little differently. So what happened? So as all of you know, there's all these forces that are happening in the real estate market that are causing uncertainty and downward pressure on prices, right? But we've also said that real estate is local, like it's hyperlocal.
Hyperlocal. So, it's funny because somebody in on one of the videos commented about, real estate prices and that sort of thing. And the example that I gave was I gave a zip code and then I said, okay, this is what the appreciation map from Stewart Title says about this particular zip code. And then these are all the zip codes that touch that zip code. And this is all the appreciation in all these other zip codes. So this is a really small area. And the disparity was huge. It was anywhere between 5% appreciation to 25% appreciation. And this is for October 2022 versus October 2021. So it was really huge. And I was just illustrating that point.
Okay, so real estate being hyperlocal, we found something that was just posted. And what this is these are the stats of the week for San Diego County. Now, this is not for Las Vegas, it's for San Diego. But we're going to point something out here. And then we're going to do the analysis like we do for Vegas and show you some pretty eye-opening things that probably going to surprise you. Okay, so when you see the one on the left is for November 25th, December 2nd, so the end of November, we'll call it. And then the next week is December 2nd to the 9th. There were 4,000 houses on the market, but that dropped. So the inventory declined going into December. Okay. What's interesting was that the number of pending sales was 292 in November, but it rose to 408. So just in a week, the number of pending sales skyrocketed over 100 houses, which is like a 30+% increase.
Okay, so this can be like the headline, right? That they sold 30% more houses in a week.
Right. Yeah, we could all have fun with these numbers. Okay, but here's the thing: if you go to the very bottom, the median price, this is sale price, went from 755 to 770. It increased.
Okay, so they sold a third more houses in a week, and the price went up. It's definitely a seller's market. The market's hot. Everything's selling. Isn't that the headline?
Yeah, that's kind of the headline. But I remember reading articles that were saying San Diego is one of the top 5 markets most poised to fall. And then this happens.
Well,
so
apparently the San Diego market did not get the memo.
Yeah, I don't think they were told that they weren't supposed to be doing this. So apparently the people who are out there buying houses aren't listening to them. They're just doing their thing. And we're gonna go through all the data here because we've got a bunch of slides. And then we're going to talk about them.
Okay, so are your slides about San Diego or Vegas?
Okay, they're San Diego.
Okay, so focus,
people. So this is what happened. So we found this information, and we thought we would jump into our Altos research, which pulls all the data. Okay, so we're going to start with the Market Action Index for San Diego.
Okay, so we're going to keep saying for San Diego because we know that you're accustomed to hearing this for Las Vegas because we want to make sure that everybody's clear on this.
Okay, so the Market Action Index for San Diego is 45. Okay. That's a seller's market. Now, it's just because it's not 90 or 100 or 80 like it was, it's still a seller's market. And when you have a strong seller's market, you're not likely to have price declines.
Right.
What's interesting is it's literally the same as it was last month. And usually this is the slow, if you look at the long-term grapher for this index, the Market Action Index, this is the lowest point. Meaning the next 6 to 9 months, it's going up, especially for the next 6 months. It tends to. We don't know if that's going to happen, right? But it tends to. So that was the first thing, okay? The second thing we wanted to do was look at median list price. Now, if you look at this chart, median list price reached its peak in the summer, probably in July, and trended down. And you can see that little dashed line, which is the trend. But the dashed line, you can see how it's leveling out, how this trend of list prices declining is starting to stop, and how the short-term moving average of this is catching up to it, which means it's highly likely we're going to see this take off and go higher again, which it tends to do every year about this time. Mm-hmm. Why this is unsuspecting is because we're told, no, all these people are going to dump their houses on the market in the spring. That's going to crash the market, right? But what we're seeing here is just normal. Like, this is normal behavior of the normal market.
It is. And when spring comes and sellers bring houses on the market, guess what? Buyers are going to have more choices and they're going to come back too.
Yeah. Okay. We'll go to the next slide then. So the next thing I wanted to look at was inventory. Because one of the things I noticed on that first chart that we showed you was inventory was actually down. There was less inventory, about 200 houses. Okay. When you look at this chart here, you could see if you go back from May to August, the inventory trend, that dashed line, was huge. It was looking like inventory was going to go crazy. And a lot of people saw that and freaked out and said, this is the bubble. This is where the homes are going to come on the market. But it made a dramatic turn around September, and inventory has been declining since then. What's really interesting is this leading little dashed line right now shows it falling pretty fast. Okay, so inventory tanking, meaning less homes. What normally does this mean when you have less homes? Like, what does it look like if you're a buyer and the number of homes on the market are going away?
Well, a couple things. First of all, if the number of homes on the market are going away, then you have less choices, which is not a good thing if you're a buyer.
Yeah.
Second of all, supply and demand, right? So if you have declining inventory, but the number of buyers remains consistent, then you have upward pressure on prices because you have more people chasing fewer houses, which leads to multiple offers, which leads to higher prices.
Okay, the last thing on this chart here, when you look back across the last couple of years, you see, yeah, but the inventory is more than it was the last 2 years. That's true, but it's still less than it was in 2019, and it's already going down. So we've had people say, yeah, but you wait, 2023 will be way more inventory than 2019. Well, we're just not seeing it yet. I'm not saying it's not going to happen. I'm saying we're not seeing it yet.
Well, even if inventory in 2023 is more than 2019, that doesn't mean that the market can't absorb that.
Right.
So it's a fallacy to say, well, if the inventory goes above 2019, then prices are going to plummet. Well, not necessarily. It just means that buyers have choices.
Yep.
And they are going to purchase these homes because, so, we're looking at San Diego right now. And let's face it, San Diego is a nice place to live. It's kind of like that Goldilocks place. The weather is nice. It's a pretty chill place to live.
There's a lot of stuff to do.
There's a lot of stuff to do. It's a good place to retire. It's a good place to raise a family. It's got a lot of things going for it. So because it's that Goldilocks place, San Diego, I don't think is going to get hurt if there's more inventory. Now, does that work everywhere? Of course not. But we're just looking at San Diego and we're just using this as an example.
Okay. The next one that I did is price per square foot. Okay. Now, as you can see, we have the same phenomenon that's happened in Vegas. Home prices are still way more than they were a year ago, and you can see the trend. But what you notice is from the peak, they've declined just a bit, maybe 5 to 8%. But that little leading indicator dashed line has caught back up. And when that happens and it flips to the other side, home prices tend to go up. Now, we don't know if that's going to happen or not. Nobody knows if that's going to happen. I just thought this was fascinating that we've heard all these macroeconomic stories about like I did see an article that said and it was one that was sent out in a newsletter. So they're pushing this information out that said 2023 will be the worst year ever for real estate. It's setting up to be worse than 2008 was. Okay. And I'm like, okay, but we're not seeing that because we don't have a ton of houses on the market. Okay. So now let's talk about the next thing. Okay. Juana, why could this possibly be happening? What are some things when we know interest rates are pretty high and potentially we have a recession next year, okay, which may or may not affect the housing market, but we could have a recession, high percentage probability. We also have some inflation. What are some factors that would keep this market, San Diego, maybe even Vegas, maybe even other markets, maybe not San Francisco, right? Maybe Miami would be in the same boat as San Diego, that would keep this specific market from crashing? maybe this is an anomaly. Maybe this isn't what's happening everywhere.
Well, clearly this is not happening everywhere, right? Because we started out by saying how hyperlocal real estate is. Okay. Now, to kind of address the first point, you talked about higher interest rates. So the first thing I'm going to say to that is bah humbug. Okay. Yes, interest rates are higher than they were a year ago, but a year ago they were stupid low. Okay, I'm sorry. But they were abnormally low. We are getting into an environment where interest rates are what they traditionally are, which is somewhere around 7%. So anything that you can do better than that, good on you, okay? Because when you're looking at interest rates over the last 40 years, that's kind of what you're looking at, is somewhere around 7%. I think people have gotten used to that. I don't think that people have sticker shock as much as they did, maybe 3 months ago. And I think people are going to get on with their lives, which is basically what I said a few months ago, is that people have very short memories and people get used to the status quo and just get on with it, as they should. Yeah. We should all live our lives.
Yep.
As far as inflation is concerned, well, inflation, is here, and here we go. A good way to fight against inflation is to go ahead and control your greatest expenditures, which is usually the price of housing. So by purchasing a home, then you're controlling your price of housing going forward if you have a fixed interest rate. So that's a hedge against inflation. You talked about a recession. Well, we've done videos on this before. Recession and real estate values, there's really no big correlation there. Generally speaking, when there's a recession, real estate is not substantially negatively impacted, if negatively impacted at all. In most of the recessions, real estate actually went up.
Yeah, and remember, the great financial crisis was triggered by real estate. It wasn't a recession that caused the real estate market. It was the overbuying, overbuilding, and the sketchy loans that don't exist. We actually have the opposite of that right now. We have the opposite of those fundamental things in real estate. The other thing, too, is remember that the inventory kept climbing through the fall of and winter of 2005 into 06, which is where we got up to 26,000 houses on the market in 2006, which is then what triggered all the price reductions and then bank-owned home phenomena that was starting to happen by the end of the year. Okay, we're going to do two things. First of all, tell the anecdotal story of the people that were buying the $1.6 million house in a really nice part of San Diego, very trendy part of San Diego, and their story about what's going on. The house has been on the market just a few days.
Okay, so they contacted their agent and said, hey, we want to take a look at the house. They couldn't really get in, so they finally made an appointment for this past weekend. But before the appointment for the weekend, the agent calls and says, guess what? I know the house was just incoming soon. It wasn't even really listed on the market. It wasn't really listed until toward the end of the week. But, by Saturday morning, the house had multiple offers. I think there were 3 offers. There were 3 offers, and they were at or above list price. So for those of you who think that the real estate market has cooled off, think again. Unless you're a buyer feeling the pain of multiple offers and getting beat out, you might think the real estate market has cooled off. But if you're that buyer who liked the house and wanted to buy it and there were multiple offers, then you're still feeling the pain of inventory shortage and no shortage of people willing to pay above list price for the right house. And by the way, this house was not underpriced. And
yeah, because the Zillow, we looked it up. We went and looked it up after we had the conversation with the potential buyers. The Zestimate estimate was about $1.5 million.
Okay, so the house was listed for like a little over 1.6, and obviously it went for more than that. So this kind of gives you a little bit perspective of, again, real estate is hyper local, and if you're that buyer, then the real estate market is pretty hot.
Now, there are certainly some areas, parts of San Diego that are very trendy, that are sort of like highly desirable. Point Loma is one of them. Hillcrest is one of them.
Gaslamp.
The Gaslamp area, living kind of in the city is very popular, or in one of the high rises there, Coronado is popular. There are certain areas that are popular. And you might say, well, Todd, that's just because those areas will always be hot. But that's true. But the first stats we showed you were San Diego County. It's the entire county of San Diego. Includes all the way up to Oceanside, all the way down to Chula Vista. It does not just these super high-end homes. This is a real thing happening in a market that everyone was just told was one of the top 5 markets in the country to fall. So there's a couple things I believe. I'll do my things. The first one is there's still a bunch of buyers out there who have been trying to buy a house that have been frustrated the last couple of years. Maybe they just renewed their lease for another year, but they're ready to get out and they're ready to buy. Here's the other thing. They've been saving cash. These people have been saving cash, and now they're accumulating cash, so they're actually in a better position to buy. And I think their philosophy is, I've got all this cash. I'm going to put a chunk of money down. I know my rate's going to be high. I'll just refi it, and I'll just deal with it then. But I want to buy a house. I want to be where I want to be, and they're not going to let the interest rates. The other thing that we found out anecdotally, because we have had some conversation, we have a lot of contacts in San Diego, a lot of agents. They still have a ton of homes being purchased cash. They have a lot of homes being purchased cash. And remember, you have people that have left other parts of California, LA County, San Francisco, who are going down. That's a thing that it doesn't really, whatever's happening fundamentally in the economy, interest rates, oh my God, there's not a direct line between interest rates and home prices. That doesn't happen. It certainly has an effect, absolutely. But in this case, we have other factors that are in, and I think there's these buyers still out there that are like, I still want to buy.
Well, and to kind of piggyback on what you said about buying cash. So we did talk about inflation. We did talk about the recession. So again, a good hedge against inflation is to put your money to work and not just keep it in the bank where it's not making any interest, right? So if you're putting money as a down payment, then think of it as earning, 7% or whatever your interest rate is on that money, right? Because you're not having to pay interest on that portion of the loan. And that's tax-free, by the way. And then if you are purchasing the whole property cash, that's great. Same kind of thing. You're not seeing your cash being devalued. But also what this does is the large down payments and the cash buyers, remember what they do is they provide support for real estate values going forward. Because now these people have all this equity and they're not going to be sensitive to changes in the real estate market and having to sell for whatever reason that is going to drive them to have a fire sale, so to speak, on their home.
Okay, if any of you ever watch the All In podcast, I highly recommend you do. They do this thing on the show called steel manning, and it's where somebody takes the opposite side of an argument and then builds a case for it.
Oh, bring it on.
Okay, so what I'm going to do is I'm going to steel man the other side of this for San Diego.
Oh, yes.
And then I'm going to let Juana maybe pick it apart or put her comments on it. Okay. The reason why inventory is falling is because it happens every year at this time. You have people, they take Thanksgiving, they take Christmas, they don't want to deal with real estate. They just want to they want to wait till after the holidays to put their house on the market. So they're really not concerned about it. Even though the market's falling and they know it's probably going to keep falling, they still want to wait a couple months to put their house on the market. Even though they know they're going to get less money, they don't really care because they just want to they don't want to have people in their house during the holidays. And, San Francisco or San Diego is such an anomaly because it's in a touristy area. You have a lot of people there. You have a lot of rich people that go down there to buy second homes. So it's not like, it doesn't behave like normal, economically like a normal market would. So you can't compare it to a normal area like Phoenix or Las Vegas that's more driven by wages and all this other stuff. And, I think once these flood of people put their homes on the market January, February, March, April, and interest rates are probably going to keep going up, that the buyers will just disappear because everybody's, no one will be able to get a loan and be able to afford these homes, and home prices they'll have to fall.
Okay, so the idea that buyers are going to be satiated, that's not going to happen.
Okay. Obviously it's hard. And look, we're not promoting San Diego real estate because we don't sell real estate in San Diego, so we don't have a motive here.
Okay, but I got more.
Okay.
You talked for a long time. Next time you do that, I'm going to take notes so I can address all your points
then
point by point.
Take down my steel man.
Oh my gosh.
Defense of the market crash in San Diego.
Okay, so first of all, you talked about that it's seasonal and blah blah blah. Okay, yes, you're right. It is seasonal and all that.
Right.
And I don't argue that. However, when you looked at those numbers were really interesting because it wasn't just that less homes came on the market. The amount of homes that went under contract was substantially more than regular absorption rate, and that's what I looked at was the absorption rate.
Okay.
So that was really interesting to me. So your argument falls a little short.
Okay.
And then as far as San Diego being for the wealthy and all that, okay, as far as I'm concerned, all of California is for the wealthy, so you're not holding any water there.
Right.
But look, San Diego, you're right. I mean, San Diego is a particularly unique situation because you've got it's a Navy town, so you do have people who are being transferred, at certain times of the year and that sort of thing. So I'll give you a little bit of that. However, most of it I don't think really is going to work because. So let's take the seasonality of the Navy people getting transferred out. Well, there's a whole bunch getting transferred in.
Okay.
So that's going to be kind of a push. So I don't really see that. What was the other point that you made?
Oh, they're all, everybody's got a ton of money there,
But that's California, so that's not impressing me.
Okay. What about because obviously people work at, everybody doesn't make, 6 figures in San Diego. There's a lot of people who just have normal jobs.
Well, of course not. So look, most people have lives and they're living them, and their life circumstances change, and their families expand or contract, and they make choices. And, this is just life. And yes, you're right that we don't really want to move over the holiday weekend or over Christmas or whatever. But at the end of the day, if you told a seller, hey, leave your house on the market now and I'll get you $100,000 more than if you put your house on the market in a month, let me tell you, very few sellers would say, no, that's okay. I'll walk away from $100,000.
Okay.
That's not happening.
I'm going to address that right now. We have done this for about 20 years. Over 20 years. 20 years. Call it 20 years.
No, not me.
More than, you're not even old, you're not even 20 yet.
No, I'm not old enough to do that.
Yes, we do know that some people wait till after the holidays because they want to fix it up and they don't want people walking in it. They're going to have family visiting. They have their own excuses. But that's in a market where home prices are they're very solid. It's a steady market. Home prices are not volatile. If home prices are falling and if you believe your home price is going to be worth 5 or 10% less in 2 months, you're not going to give up that money because you don't want somebody in your house during Thanksgiving week or the 2-3 weeks before Christmas because you're decorating your tree the whole month, right? You don't want people It's not like someone would say, I'm showing your house. Okay, fine. We'll stop decorating the tree. You can go walk through it. We'll walk in the backyard.
How many of you would pay $100,000 to decorate your tree? I'm guessing not very many. And that's really the point of this. So if people really were to believe that their home values would be substantially less in a month, they certainly would not take their properties off the market. If people believed that their home values would be the same or more in a month, then yes, they might take their properties off the market. And that's really what the point that I was making.
The massive rise in inventory that we saw that was a higher rate than normal was a lot of people, and we talked about this, they were going to sell in the next 6 months anyway, but they pushed that sale further forward because they felt like the market had downside if they waited 6 months. And we said, you can go back to the videos, I think in May, where we said what will happen then is when you get to when they were going to sell their house, there'll be less inventory because they just took the house they were going to sell then, they pushed it here, and then in the future there'll be this hole. And guess what? We're seeing in the data.
Right, yeah.
We're seeing this decline. And
Absolutely.
The only thing I've heard for refuting is, there'll be a huge number of people next year that dump their homes on the market. And I'm like, well, what? Look, all we did was took statistics and data and we analyzed it. We don't have a dog in the fight in San Diego. We're not trying to get business in San Diego. What we're trying to do is analyze what happened and how that compares with these articles that we're reading about San Diego is one of the top 5 markets poised for downturns. If this is one of the top 5 markets for a downturn with what's going on, with prices went up $15,000 in over a 2-week period, I don't know. I mean, I don't see like the bad news or this doomsday recession where, our GDP is going to go from here to like 0.5% less, but that means everyone loses their jobs and everyone has to foreclose and sell their homes. And if you believe that, that's fine. Just save all your cash and then wait it 2 or 3, 5 years to buy a house when home prices are half of what they are now. But there are people that in 2013 that went through this. There are people in 2017 that went through this. There are people in 2019 that went through this.
Okay, so another point that I think we've kind of beaten to death, but I think it bears repeating at this point, is that we're looking at a completely different market than we've ever had before, because such a substantial portion of the national market, we're not talking about San Diego now, but just nationally, such a substantial portion of the market has been purchased by institutional investors, and they have a life cycle of their own. So what I mean by that is a regular homeowner has a predictable life cycle as far as when they will turn a house, right? So you can look at neighborhoods and you can say, well, this neighborhood, the average time of a house being brought back on the market is 7 years, 9 years, 11 years, whatever. Okay, but we don't know what that cycle is for these institutional investors, and we believe that it's going to be a very long life cycle, maybe 20 years. And so that means that essentially those blocks of houses have disappeared. It's as though there was a hurricane and they're completely gone. So because of that, that reduces the amount of possible inventory on the market, and that helps to keep prices stable or to push them up.
And this has been happening for a decade. Mm-hmm. So it's that person that sold their house a decade ago to Blackstone, that one of their buying units is a long-term rental. They would be selling right now because 10 years they would be, we're getting transferred, we're going somewhere else. But it never happened because they sold their house and then no one bought it, meaning the person that bought it wasn't going to live in it. It's now a renter living in there. Some tenant is living in there. So the only real risk that I see, substantial risk, is it's not interest rates. It's that these hedge funds, for some reason, one or a bunch of them start selling all the homes. What I do believe will happen is that they won't do it through the MLS, through agents. I think they'll just go call their buddy over at Goldman Sachs and go, hey, look, we have a portfolio. It's 2 billion homes. We'll give it to you at a 5% discount. It's producing 6% per year returns. The guy at Goldman Sachs will be like, holy cow, this is a smoking deal. I can't buy bonds at that 5% discount at that rate. Mm-hmm. So I'll take it. And I just signed a piece of paper that assigns the interest. Mm-hmm. So you're not now having to pay realtors' fees, all the transaction costs, all the transfer taxes. This is a very unique thing. I think potentially municipalities will catch on to this and will be like, hey, wait, you bought this house, but now he has an interest in it. We want a transfer tax. We just transferred ownership. And then you'll be like, well, but we didn't transfer ownership of that specific house. We transferred ownership of an allotment of all our whole portfolio. So we technically didn't sell the house. We technically still own it. Or they'll do something like that. Will that cause a problem in 10 or 20 years? It's projected by 2030 that 40% of all rental properties in the U.S. of all investor-owned properties will be owned by Wall Street hedge funds.
Right. That's
at the current rate. We know that they bought anywhere from 18 to 24% of the houses in the U.S. in 2021, including 30% in Vegas.
Right. So, this is something to watch going forward. And like I said, it is a new phenomenon. So none of us know how this is going to play out. As far as I am concerned, I don't know that even these institutional investors know what the end game is, because this is new territory for them too. I think this is something that they're constantly evaluating and trying to kind of figure out their way through it. So it'll be very interesting to watch. It is good for the market in the sense that it's supporting prices. Mm-hmm. It is not good for the market in the sense that all these homes are not able to be purchased by owner occupants. I think, and I've said this down the road, I think that is a possible exit strategy for some of these institutional investors, is to go ahead and sell these homes to the people that are currently occupying them on some sort of a deal where they're holding the note and they're still making money on it, and then that sort of thing. So watch some of our videos, because I've talked at length about what I envision this looking like. But for now, I think this is nothing but support for the real estate values. And as far as San Diego goes, yes, it's a Goldilocks place, and I think lots of people would like to live there, obviously. And their market, as far as we can tell, is doing pretty good.
Okay, so we're going to do, in a couple days, we're going to do another Las Vegas update because been doing every 2 weeks to kind of catch the trends earlier. And then we're gonna wait probably 3 or 4 months. We'll probably do it in like March or April. And we're going to do another San Diego one. We're going to look at the data.
Okay.
And then we're going to do is we're going to take clips from this video and compare like our prediction and then see if really the inventory like piled on like crazy or what happened with, because remember, this is one of the markets they're saying top 5 market for potential declines. They've been saying it for a while now. And, based on what the inventory was doing in June, July, August, September, that looked like it, but then all of a sudden it literally like made a sharp turn and it's going the other way.
Right. So if you thought this video was interesting or entertaining, if you learned something, or if you just like watching our videos, please hit the like button, please subscribe, hit the notification bell, leave us some comments, particularly if you're in San Diego or in SoCal. Tell us what you think. We are not there. We just happen to know people who are there, and we can look at data. If you ask us to do a video on wherever market you're in, we will certainly consider it. If it's a market that we have any familiarity with, we will do some research and we will put out a video. If it's a market that we know nothing about, which is probably most markets, because let's face it, there are a lot of markets out there, we may not do a video, but at least give us the opportunity to try. So thank you for watching the video, and we'll see you on the next video. Bye.
Bye.